What's going on, guys? Okay, guys. On this series, I'll be explaining the time frame analysis. Time frame analysis. It's necessary as a trader for you to understand how to trade multiple time frame in the market. I know it seems confusing after learning forex. You you scale through different time frames and you be like, why is the daily time frame different from the 4 hours time frame? Most times you see that the trend in the daily time frame is an uptrend, but when you switch to the 1 hour time frame you see that it is a downtrend and you get confused. You might see a bullish engulfing candle in the daily time frame, so when switching to the 15 minutes time frame or 4 hours or 1 hour you see a bearish engulfing candle and you be like, what is happening? What you need to understand is the time that works on each time frame. Yes, these are time zones. If you clearly see from here, you see that I am highlighted on the 24 hours time frame. That is the same thing as the daily time frame. So what happened here is in the 24 hours time frame, that's the daily time frame. In the daily time frame, candles forms per day. I'm going to zoom out to make a little explanation concerning this. I want to count the numbers of candles that has formed. I want to count the numbers of candles that have formed. This is one, two, three, four, five, six, seven. Or let's start from here. One, two, three, four, five, six, seven. That simply means from here to here is complete 1 week. You understand? Because 7 days make what? Make a week. So if this is the daily time frame, it simply means that candles forms every day. That's each day candles will have to form. Now this is the candle for today. Next day candle will have to form. Another day candle will have to form. So what happens in the daily time frame is candles form per day. So from here to here, that's from 1, 2, 3, 4, 5, 6, 7. From here to here is complete 1 week. That's candle was formed in a week. You understand? So now if you scale to the 4 hours time frame, candles form every four hours. And also scaling to the 15 minutes time frame, candles form every 15 minutes. The 5 minutes time frame, candles forms every five minutes. And the 1 minute time frame, the candles forms every one minute. So that's why if you scale to the lower time frame, we get to see that candles become larger than the previous time frame you were before. Let's say this is the daily time frame. I'm highlighted on the daily time frame as you can see here. So if I'm scaling to the 4 hours time frame, you see that this means from here to here will be large because candles form every four hours. Now here you could see that from here to here candles forms per day. Candles forming per day is not going to be the same as candles forming every four hours. The one that forms every four hours will be larger than the one that forms per day. So that's just the difference. So now if you see from here, now let's use only this place to create a trend in the market. So I'm using my trend line to do something of this nature. From the high here, from the swing high here, okay, to this high down here. From this very high, that is um resistance, from this high resistance zone and to this low resistance zone, you will clearly see that the moment market get in touch with this trend line, market reversed, get in touch with this trend line, market reversed. Now this is and not the this is the last touch of this trend line, market is about to reverse. And what are you seeing here? What you are seeing here is candles trying to go down, coming down. You could clearly see there's a way you scale further to maybe the 15 or 1 hours time frame, you start seeing bullish sentiment. Like you see the market trying to go up at this region. You understand? Maybe you might see them around this region, maybe market trying to go up around this region. It's explaining what that time frame. Market is only explaining the time frame. That what that time frame is saying. Market is explaining that time frame. So you don't have to get confused. Now this is the daily time frame. Let me scale to the 4 hours time frame. So you see how this place will get larger because market and candles form every four hours. Now let's go to the 4 hours time frame to see. I'm scaling to the 4 hours time frame. You can clearly see the the last trend line I drew in the daily time frame. You see how it is now large here in the 4 hours time frame. That was from this high resistance zone to this low resistance zone. Remember the market was coming down. Yes, was coming down. Yes, you could clearly see here. That one candle you saw in the daily time frame is these two candles. There are these two candles here now in the 4 hours time frame. Two candles will be larger here. And what can you observe? You remember that in the daily time frame, this was the trend of the market. This was the trend of the market in the daily time frame. But if you observe, you could clearly see that it looks as if market is trying to form an uptrend here in the 4 hours time frame, something of this nature. From this low resistance zone, sorry, low support level to this other support level. This is like trying to create an uptrend, but we didn't see something like this in the early time frame because candles were not much. Now let's scale further again to the 15 minutes time frame. Scaling to the 15 minutes time frame. You scale into the 15 minutes time frame to get to see what market plays out. Okay, I'm sorry for the interruption. Let's get to self chart to work. GBP GBP USD. Sorry, GBP USD. Okay, we have to self chart work so that we can come back later for a review. Okay. Okay, for now we're trying to scale to the 15 minutes time frame. So now let's go to the 15 minutes time frame on the GBP USD pair. Okay, you clearly see the uptrend I drew from the 4 hours time frame was a bit smaller, was smaller than that of the 15 minutes. You can clearly see how it is now large because candles forms every 15 minutes. You go see that all these long bulls, the long candles you are seeing here, is not what you saw in the higher time frame like that of daily and the 4 hours time frame. But the moment you switch to the lower time frame, that's the 15 minutes time frame here, you saw these long bulls in the market. These bulls, that's the uptrend here, the bullish candles here in the market. So you can as well use this time frame to trade. How do I use this time frame to trade? Now we have to go back again to the daily time frame. Let's say for example you are a support and resistance trader. As a support and resistance trader, you should know, in short, any trader you can, if you really want to get a nice entry, you will have to start from the higher time frame to perform your analysis. Starting from the higher time frame to perform your analysis, that's what we call the top down analysis. If you start from the higher time frame to perform your analysis down to the lower time frame, we call that top down analysis. Call that top down analysis, so you have to keep in mind. So this is the daily time frame of the GBP USD. Please, when you see 24 hours, it's the same thing as the daily time frame. Okay, Now let's say for example you are a support and resistance trader. Those are key levels. You trade key levels in the market, and then maybe you have aligned your visible daily key levels in the market. And the ones I can see clearly here, I think this zone is valid. The zone here, okay. Yeah, this zone is valid. Let's use here. This is a valid key level. I'm going to explain why there is valid. That level is valid. Can I still concentrate on that? Whenever you are aligning your key levels, you don't have to align much of them. Just you might just align like two. You might just align, then concentrate on that two. I've seen another valid key level of which I'm gonna align. And you might work on those two, try to do something with them, see how you can use them to trade. It's not compulsory. You mark all of these key levels. No, like I might decide to use just three. Let me choose three. This is one, and this is two. Let's make it three. And then I can see another key level at this point. Yes. I'm going to explain why I'm choosing those zones. I'll be explaining why I'm choosing those zones. Yes, the reason why I choose this zone was because formally, you clearly see, the market came down, retested this level, and make a move to the upside. It was like a bounce. That when market came to this level, market bounced off this level and make a move to the upside. That simply means that market respected this zone. Then coming over to this level, market was being converted to a resistance. Remember, this is a support being converted to a resistance, still at that same zone. So that zone is respected two times. This two times in this two zone. Okay, clearly see this is the first reversal, and this is what the second reversal, still at that same zone, indicating that that zone is valid. And then let's say, for example, you want to enter. Remember this is the key level leading to the next key level here, and this is where you are targeting. You are targeting this level. That's you want market to drive you down to this next key level, but you don't know where to enter so that you can continue with this trend. It is through time frame, multiple time frames, that will help you to know your entries in the market. So what you have to do, you just have to scale to the next lower time frame. For me, I love scaling from the daily to the 4 hours time frame. In some cases, I might scale to the 8 hours time frame. Now this is the 4 hours time frame. You could clearly see how candles looks different, not like that of the 24 or the daily time frame. Now we see another key levels here. Remember, we found another key level here in the 4 hours time frame, and then we can use this as another key level. Yes. Why we use them as key levels? Because market respected that level. This is a nice key level. Why I say that level is a key level? Because we had a lot of reversals at this zone. So this zone might be valid here. Market might just, break this level. Market broke this level already. The level that got respected here before, market broke the level. So what market you have to do is market coming for a retest of that level and then making a move to the downside. But your target should be here. This is where you have to target. You might target this low here. You understand? You see the use of the essence of switching to time frames to in order to search for a nice entry. How wish you didn't scale to the 4 hours time frame? You might be contemplating, where am I going to enter from? Where am I going to enter from? But because you switch to the 4 hours time frame, you know that market will have to drive to this level and then make a reversal. I wish you were still on the daily time frame. And you might have, it you might have thought that market will have to, pull up to this zone. But before market pull up to this zone, market will have to retest this zone first, make a move to the downside before coming up to this level. And that will take a lot of time. You understand? So we can switch further again to the 15 minutes time frame, or let's use a 1 hours time frame. Yeah.
the 1 hour time frame. Switching to the 1 hour time frame, we could clearly see that market is trying to create an inducement here in the market. Do happen, you might get confused of what is inducement. Inducement is just a trap, but let's just cut off that statement for now. We're trying to explain the time frame analysis. What market is trying to create is just a trap in the market. This is like a trap in the market. You might not understand, but just be concentrated on the time frame we are explaining. Now, remember I told you guys that market will have to pull back to this level. Market will have to pull back to this level before making that reversal. Yes. Now, there are things in the forex market that gives reasons for a nice entry. Like we have inducement, we have imbalance, um we have um other block zones. Now we got what? We got an inducement and we got a perfect order block at the zone. That's where you come in with your supply and demand. You might not understand the supply and demand if you are learning time frame analysis for the first time. You might not understand, but just know that it's mandatory for you to know this time frame analysis so as to use them to find a nice entry. Now I'm going to use this zone. This is the 1 hour time frame as my entry. I'll use this zone as my entry, bring my short position over to this region. I believe that market will have to do is for market broke this level already. The market will have to pull back to this level, mitigate me at this level, and then sell to the downside. So that's my view. That is my view. You clearly see because of multiple time frames, you now found what? An entry, a nice entry in the market. So that's the use of multiple time frame in the market. You can't just use one time frame to trade, except maybe you are an experienced trader that just sit in the market. So thank you guys for watching my video up to this point. Please, um, if you're looking for mentorship, you have to click and join my free Telegram channel so that you get to read the headlines concerning my mentorship and my free training. Thank you very much, guys. Have a blessed day.